it breaks down to the harmonics of 360, the degrees of a circle. Now you can divide 360 by 2. If you divide 360 by 2, you get 180. Divide that by 2, you get 90. Divide that by 2, 20, 45, 22 and a half, 11 and a quarter, 5 and 5/8, 2.8125. Or you could divide by the trine, the threes. So 360 divided by 3 is 120. Divided by 2 is 160, and then 30, 15, 7 and a half. And then we note that there are several angles in here that are doubly strong. So like 7 and a half and 15 are 22 and a half, 11 and a quarter twice are 22 and a half, 30 and 15 here are 45, 11 and a quarter and 33, 45. So these numbers are both in there. And note that these are your square of 9 22 and a half degree cycles. So all trading is going to come out of these divisions. You're going to find that the stock itself is going to be at the price. If you had a stock at 56 and a quarter, it would react to that. Or if it moved these distances, if you had a stock at 30 and it moved up 11 and a quarter and it was now a 41.25, you would get resistance then. So all trading basically comes off of this. All time and price harmonics that we'll be trading will be these divisions. On this chart, we see a bunch of 15-degree multiples. From here to here was 15 degrees. It broke under that. That was now the high. Then it went down 30 points on the day. And then that was resistance. And finally, the final low of the entire day was 45 points exactly, down from the high tick. And note also it was exactly here, like 5 hours. Often you'll have these big brokerage firms send their teams out and say, we're going to be selling for 2 hours, and then we'll buy them for an hour, and then we'll sell them for 2. And you often get these things exactly to the minute of where the highs and lows come out, because they have these teams of buy and sell orders that are being adjusted. Here we have a E-mini where it started today, and it went up exactly 56 and a quarter, exact number. And then you start a big decline. And the first part of the big decline down was 45 points. Then you had a decent rally, but it didn't take out the prior top and is still going down. So ultimately, the big final drop was exactly 90 points. And then you had a vicious rally that was just about 45 points. So these are the same figures you'll see all the time. Longer term moves are just the bigger increments. Here's oil. It looks like a funny number, 62, probably 62 and a half or 3/4. But 62.43 at the low plus 67.50 was your high, 130. Here's a 116 price minus 22 and a half is your low. Here's a 123 minus 52 and a half was the low over here. Now here's how I make my money every day. Here's like a 5-minute chart of Exxon. So let's say you're following Exxon, you got some trend lines or something, and it suddenly gaps down here. So you know there's a little breakdown. So normally on these trading stocks, you can decide what is your increment. It's going to be 3 3/4, 2.8125. On the big trading stocks, it's often 5 5/8. So often what I'll do is I'll go down 5 5/8 and draw a circle. And that circle will kind of define the trend, and that gives me a low at exactly 5 5/8 points down. And then as soon as I get a tiny little reversal bar, I'll go long. Maybe I'll buy options in here. Then we start to fade, and as we start to see lower highs and lower lows in the pattern, I'm going to predict a target price down 5 5/8 lower, and you get right down to there. The big turns, especially on the hourly E-minis and things, are just bigger things. If you've been going up for a week or two or so and you top out on the S&P, you often go down a full 360 points. That would be your big drop, 360. First way down, you might look for 180 or so. Here we got to 180, you blew through it, and it was the top for a little while. You went a little lower, then you went up, hit the trend line, and failed. From this top here, you went down 270. And then that tied in basically with your 360 over here. And then you start a long-term cycle going up. Always remember, though, it's numerology, so from our low, keep count of your bars. This is the final high from the low to the high and then back down was exactly 360 bars. Half of that here would be like 180. Half of that would be like 90. Half of that would be like 45. So count your bars in these same breakpoint numbers. Now we want to put on some angles to find time cycles in particular and look at momentum, because the momentum and the angle tells us about how long the trend is going to persist. So let's find the natural angle. Let the chart tell us. So from this low to this high, this is the angle. Doesn't matter what that slope is. It's not 45, 52, I don't care. This is the slope that it's following. What we do now is we put our little grid angle on here. We go up our 8 units over and tie it in with the slope. So the diagonal of this 1/8 grid is our original slope. So now we can go down to the 1/2 unit and get a 1/2 angle measured off that first unique slope. So now we have our second angle and we put that on here. This is our 2x1. And now we go and get our 1/4 angle, which goes on here, and that goes to the 1/4, and we're going to put that down below. So now we have all 3 angles on here, and they're going to guide us over the way as they're following these. When they break one angle, they go to the next angle down. And then they break one and they go to the next angle down. So some of the discoveries I've made deal with these differences in time and price. The price is vertical and the time is horizontal, and it's angular. So we can take this measured move and do something with it. So here, after the top was made, we take this vertical distance, grab that little bar and drag it over here to these angles and put it over here, and that's our second top right there when the spacing is the same. Now we can also do something. We can take from the top angle down to the angle here for that bigger size, and we can slide that guy over here, and it gives us this exact top here. Again, these are very precise things right to the day, right to the bar, without any moving averages or anything else to look at except your bar chart. Now the traditional way of looking at this, and then there's an important difference here. Normally we go square the range. That would be from the low to the high. This is the range. And to square the range, we just draw a horizontal line. So when you get to the next angle, you're right over here. You've gotten to the same range again on the second angle. And on the third one, as you continue over, you square it here. It looks like a little aberration here, but it's the same price. It's a little over 220, you know, right in here, a little over 220. But these are the same height. So if you go straight across to your angles, you'll get these same square routes. But note the difference. What I was doing was the incremental ones, and so what will happen on the incremental ones, we'll get much better trades than when we just do it horizontal. Here's a typical case here where you have your 3 trend lines on, the primary angle, the half angle, and the 1/4 angle. And see, squaring the range, you go horizontally, you get a turn right there, and then you get a turn right over here. Also note, since these angles are very precise and unique, you can go up from one top, and that will give you future resistance right over here. Now this stuff works on any time frame. Here's the very long-term one over a year and a half on the S&P. So you get your primary angle and then your 1/2 angle. You can square the range either this way or just take the vertical distance, and then you'll get this big giant turn in the market right there. But see, what I do, which is very unique, is this. If you were just squaring the ranges, you could draw a horizontal line, and yeah, you get a turning point over here when you intersect that. Maybe you get a turning point here, and then what do? You're going across here. What do I do? Well, if we take the individual heights here, and then we turn them into displaced heights, this one gives us a turn right there. And then this height right here, we drag up, and it gives us that turn right there. I can also take these various angles here. Here's my 2x1, or my 1x4 angle, which is your true 45. And that one you see precisely caught the bottoms in here. And then I put that on the bear market high, and it gives me the next bull market high right here. Here I didn't use the 2x1, I used the 3/8 by 1, only because it fit much better. You could actually turn this into like a Gann fan at all these levels, but usually you'll find the 4x1, 2x1, and 1x4 work the best. Though once in a while you get an oddball like this blue one, but since it fits so perfectly, I was using this for several years. So in summary, the market is very mathematical, based on 360 usually, although you can use my circular methods to get a unique price and time. You don't need any statistics, no moving average, no oscillators, no red or green, nothing. Every level is exact. You use the cyclic turns for the big bets, as opposed to just minor scalping at support and resistance. Keep your time frames up to date. Put this on all your 1 minute, on your 60-minute, your dailies, to get the bigger turns. And also remember, you can have a bad personal cycle, and that's why you always have to have a stop loss and learn to trade smaller. If you go into a period where you start to lose or read the market backwards, your personal cycle is probably backwards for a while. And I get a lot of